Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Today, we are thinking about whether this current bullish upcycle we're in is going to continue. In particular, we're thinking about what some of the underlying factors of this recent very exciting bullishness may be. So we're going to unfold some of that as well as think about and take a look at how traders in the background, in particular, as may be visible in our options data, may be preparing for a development of this trend one way or another. So that's coming up today. What we are starting out with, of course, is always our gratitude. And today's gratitude once again goes out to AmGo Blue, otherwise known as Jake Graff, for sponsoring today's article and video newsletter breakdown, as well as to our monthly supporters, Ken Wedmerlin and Not Medical Advice, who have generously pledged to offset some of my data expenses on a monthly basis. Thank you as well to everybody who has been supporting the channel, has supported the channel thus far, either be that with donations, buy me a cup of coffee, or leaving comments, questions, that sort of thing. Any sort of engagement that you guys bring, right, helps me and helps fuel some of my own investigation and helps me find new directions to develop in order to better understand what's going on here with GameStop. So let's get into it today. I was thinking about this. So Jake2B put out a really interesting post today. I think, still have some time to digest it, maybe ask him some questions in particular. Yesterday, right, he put this out about thinking about, what's going on with ETFs and how Roaring Kitty may have been able to use the FTD data to his advantage in order to demonstrate how certain dynamics come into play with respect to GameStop's price action via ETFs like XRT. We talk about XRT here on a regular basis. It's one of those funds that I keep a close eye on. Obviously, right, Richard Duden keeps a close eye on what lending liquidity and outstanding numbers look like for XRT. So, this was something that I decided to I started to reflect on and think, okay, right, we've been waiting for this bullishness, right? We've been thinking about this. Richard's been talking about this. Some others have been talking about this. And so really there's this open question because, these timelines, right, these ETF settlement timelines are so tricky. Exactly what's happening in the background is very difficult to get a thumb on. But, right, it does seem as though, maybe we can't get things quite to the day, but we can sort of get an idea within a couple days what potentially may be happening as far as settlement goes. And one thing that seems to be the case, and I think this was certainly some value that stuck out to me initially about Jake's post, was this idea of quarterly rebalancing and quarterly. Well, I should say certainly for a fund like XRT that specifically has a reweighting period, right? So a reweighting day, 3 business days from the end of 3 business days. I think from the end of June specifically, but it may also be quarterly. I'm not sure how often they reweight. But so I thought about this and I thought, okay, right, how does this come into play? Well, certainly this is something where Jay suggests that this was something that Roaring Kitty played into last year with the unexpectedly bullish results of our Q4 earnings report in March of 2024. So I thought about, right, this timeline. Of course, we have some of these dates coming up in June. So my thought was, well, are they necessarily going to want that sort of thing to happen again? We're going to see a lot of this on Superstonk. People are excited. It's, we're at the 1-year anniversary of Roaring Kitty's return last year. And the question is, okay, are we going to see something like that, right? Is he going to drop a tweet? Right now, some of these anniversary days, I think this is one of the last of the early May anniversary dates is, coming to go. Now, a lot of people are saying, oh, nothing happens or no dates, nothing ever happens, blah, 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 blah. I mean, look, as far as the way that I analyze the stock, as far as how my trading goes, like, people are all unimpressed with a dollar move. A dollar move in the stock is pretty cool as far as I'm concerned, right? That's some real movement. It's certainly something exciting as far as, let's talk about the bond arbitrage traders, right? I mean, we see these bonds are trading at all-time highs. 6 weeks, they're already up over 20% on these bonds. And a lot of this has to do with, sure, the appreciation of the underlying, but I mean, hell, these bonds aren't even in the money yet, right? Thinking about them as far as call options as a comparable item to a very, very long-term call option. But right, so if there are these sort of settlement factors that are coming into play via ETFs, are those factors still coming into play now? But are they coming into play potentially in a different way? Are they what really is going on here with respect to this genuine, very, very much appreciated bullishness that we are seeing in the underlying stock? And so right at the front of today's newsletter, I put out these two images. So the first image tracks FTDs. So this is FTDs over in XRT. We should get FTDs for the second half of April drop tomorrow. So that will be very interesting. We do have these FTDs for XRT. And then if we scroll down, this is from What Can I Make Today, user What Can I MT. So this is, he posted this about a month ago, so 27 or 28 days ago, so about 4 weeks ago, once we got the cat hour data for the early portion of April. And what we can see, right, is we have these historic 4 days of cat errors, so 7, 8, 9, 10. What I will point out is that we had some amazing historic creation on XRT. So XRT by the 10th, you'll recall that on the 4th, so actually, right, very interestingly, right here, so when we had these 2 days of really, really heavy fails, so we had some very, very heavy fails. I will note the 28th and the 31st, we had these 2 big days of heavy fails. Estimated there were some GameStop equity swaps here. Of course, this is right on the tail end of the convertible bond shorting, but really heading into that whole lead up and kind of exit related to the convertible bond and Q4 earnings for GameStop was like, man, massive fails, massive inconsistent fails. Of course, we know during this time period, XRT is on reg show. And then the 3rd and the 4th, we also got a lot more fails. So over 1 million fails on the 3rd, 440,000 on the 4th. XRT reached a recent high in its outstanding right on the 4th. So on the 4th, which of course is whatever we see on the 4th, is whatever the outstanding was on the previous day. So the outstanding of XRT on the 3rd of April, based on the data we had on the 4th, was the highest that we had seen since Roaring Kitty's return in April and May. So on the 26th of April, we saw it get up to 9.7 million shares. This is 26th of April, 2024. And then we saw it on the 14th of May get up to, in 2024, get up to 9.7 million shares again. That did not occur again until this day, right here. What's also very interesting, and this was something that was curious to me that Jake2B pointed out, is that we saw something similar. Well, that was a little bit earlier, right? We saw, well, the similarity was that in this same range, basically starting about a week earlier, we saw very, very heavy fails in XRT. So on the 15th of March, for example, we saw over 1 million fails in XRT in 2024. So that was the 15th of March. So this is about 2 weeks later. But this certainly raised the question: are what we see, is what we're seeing now, this kind of bullishness that we saw going into the end of the week, did that have something to do with the closing deadlines of these XRT fails? For example, we see that if we walk these up T plus 35 days on the 3rd and on the 4th, that would correspond to, right, the settlement date would be the 4th and the 7th of April. But these would map out to having to be closed. These FTDs would, have to finally be done on the 9th, the 8th, and the 9th of May there. So they were able to get XRT off reg show on the 24th. So did this, in fact, give them a bit of an extension so that they could get back to having that full T plus 35 so that they were no longer on the shortened threshold securities list deadline, something like that. So is that maybe what gave us a little bit of buying pressure going into the end of the week last week? And if we look forward, right, we also had these days, the 7th, 8th, 9th, 10th. So these few days actually right off of when XRT had this massive number of fails. So beginning with the settlement deadline for these major fail days on XRT, we started getting billions of cat equity errors. Right. So, in fact, some of the highest, I believe the highest of all time there. So this is from a snippet of a post, again, as I mentioned, by What Can I Make Today? What Can I Make MT? What Can I MT user? So he points out here, right, that we have C plus 35, so calendar plus 35 deadlines for any settlement related to these particular errors taking place basically this week. So May 12th, Monday, yesterday, today, and Thursday. Okay. There's also a T plus 3 thing here. So this also has to do with, yeah, this has to do with, okay, so if you have an FTD on, okay, so this is it. If it's not an ETF FTD, right? So you can C plus 35, let's say an equity FTD. You can then redeem securities from an ETF and fail an ETF. That gives you another T plus 35. And then we've got T plus 3, something like that, basically using the authorized participants. So there's like a settlement detailer. I have to go read this, Rule 204. I'm not familiar with Rule 204, so we can go check this out maybe in a live stream this weekend. But in any case, right, What Can I Make Today is also pointing out that these 4 days in particular map to the C plus 35 deadlines for these cat equity errors days, these really huge cat equity errors days. And I'll notice that the last of these, the 10th, is when we got all the way back up to 9.7 million shares outstanding on XRT. No, was that the... No, it was the 4th. The 4th was the really high day. The 10th, or the 3rd, the 4th. The 10th is when we got back down to a low. So this is when we got down to 2 million. So basically through these whole days, they were really, really heavily redeeming XRT. In fact, we can just go, I can go show you this. If you haven't taken a look, for example, at Richard Newton's spreadsheet, he does meticulously keep track of these numbers, a really excellent resource that he has put together, completely free. And we can see, oh no, okay, I was right. Okay, I was right the first time. So as we can see, right, so we got down to 2.35, which was the lowest we had seen in, 3 years as a low, and that was on the 4th. So that was on the day that we saw those, right? So this day is what's recorded as the outstanding. So that is what the outstanding was on the 3rd when we got those 1 million fails. So very interestingly to see this correspondence here. Then on the 10th, right, so we saw a huge refill here very quickly, up to a 52-week high on XRT outstanding, which would have been on the 9th. And of course, in this period is when we had those, close to 100 billion cat equity errors. And then we went way, way back down. And in fact, we went down to actually right on the 30th of April, the lowest, the 1st of May, which would have corresponded to the 30th of April, the lowest outstanding we've ever seen in XRT. Very interesting to see if, in fact, right, because we got these huge fails here. This is what's going to be really interesting to see starting tomorrow. We got these huge fails on XRT on the 3rd and the 4th. And that corresponded to this really, really deep low. Okay, and now back here, of course, this period corresponds actually exactly to, so when we see these really low periods in XRT, right, we can see shares get pretty low. This is decently low. Richard's done a really excellent job color coding these things. This is when we had this big run of fails. Right, so let's pop back over. You can see this first big run of fails is when we had, right, so between the 21st and the 31st, a little bit on the 1st of April as well. This is when we had a really big run of fails on XRT. If we bump back over to Richard's sheet, right, that's exactly this period right here, where we had a pretty low outstanding in XRT. Okay, bump back up a little bit on the second and the third, and then boom, we shot back down to 2.35, and that's when we had, right, that corresponds to the third. That's when we had that 1.1 million fail day in XRT. Now, if we bump forward, we can see we went back into this crazy, crazy low range here again, right? So 16th, right? And so this begins right just after, right? This is our cutoff. The 11th is our cutoff for XRT FTDs. Tomorrow we should be getting data basically up to the end of April here. So covering this period. Interestingly, not covering the day that this outstanding was reported, but this should refer, right? This number should point to what the outstanding was during the actual trading day on the 30th. So interesting if this is a trend that emerges, that we see that we have very, very high numbers of fails if they correspond to very, very low outstanding share numbers in XRT. Very interesting. This could mean that we will see something of a something of a return of this volume, right? If indeed some of this bullishness that we saw into the end of last week was a result, let's say not even just the end of last week, but especially including the end of last week, some of this bullishness that we saw was the settlement of these XRT FTDs, especially the ones related to 4.3 and 4.4. And then this would then correspond to, of course, projecting this out into June. So seeing how these might shake up, right? But then what does that mean about right now? Well, we saw that there is this huge amount of creation on XRT here leading into the 10th, where it's peaked, corresponding to 4 days of also historic cat equity errors. So are we sort of juggling back and forth now, very interestingly, ETF, so XRT FTDs, followed by large numbers of cat equities errors? Are we about to go into something of a lull here, followed then by another wave, right? So are we going to have something of a lull following these couple days, maybe a few days here, where things kind of smooth out a bit, followed by a return of FTD settlement on XRT, something like that? This is sort of my open question, right? And if we go off of what can I make today's table today, it does seem like, okay, if these cat equity errors are holding us up, right, then this may be where we can expect some of this bullish volume to kind of start to taper off, maybe into the 15th. And this would, be a good timing. If I were an options market maker, I'd be pretty happy about that. Maybe I could go out, get some lending liquidity, shove the price down, something like that. Let's think about that, right? So that's one thing I think I'm a little concerned about right now. I mean, I'm not, again, as a whole, am I bearish on the stock? No, of course not. You guys know my feelings and basically my theory and working hypothesis, investment hypothesis for GameStop. And in general, I'm very bullish going forward in longer term stuff. But if we're thinking about short term, sometimes rapid price adjustments, then there is something that is a bit of a concern, and that is the use of excess lending liquidity in order to adjust the price downward. Now, in a broader market context, things are looking decent, but we are potentially looking at something of a retracement. I would expect something maybe of a retrace in the near future, maybe not immediately, but something that kind of tests these support at these moving averages in the 570s. Maybe coming out of May OPEX, maybe we get a little bit of a cool off here. If we're going to see SPY continue to move up, we need to move into this bracket. We need to challenge the 600 call wall there, which we could have, but things definitely have, we would say, sharpened. I talk about a bearish environment softening, I guess a bullish environment sharpening, which, possible increase in volatility. Things still look good. I mean, we're still call GEX dominant, I should say, heading into May OPEX. It's just not nearly as much as it was earlier in the week. That's okay. Still very high. What we might see is if SPY doesn't get over that 590 level, we could correct down into the lower 580s, and then maybe into the 570s early next week as all of this call gamma comes off the board from May OPEX. We'll have to see if traders decide to roll that. Now, what does that have to do with GameStop? Well, we do have quite a bit of quite a bit of lending liquidity popping up. So great bullishness yesterday, obviously. Really interesting to see us bound by the opening and closing price of that earnings day candle. So after earnings, the 26th of March. So I drew these lines. I just drew these as historic lines. We can see how well these were respected intraday. This one's actually a little high. It's lower. It should be down much closer to should essentially lay right on top of this here. But not infinitely precise. That did define a lot of our trading, where we came out, we stalled right there as we came out of the gates. We hit this high, and then we just kind of sat on it the whole day. We sat on this level, moved back up again, and then got moved back down for a close just a few pennies above that. Interesting to see that. Not exactly sure why that would be respected like that. Bond traders happy as well, right? Got that increased IV, increased price, kicks us up a little bit with respect to the convertible bonds. But what we see on lending liquidity is we sure do see those shares in XRT are coming back up. So we're at 8.2 million. We're not quite at those 52-week highs, but we're getting close. GameStop lending liquidity right now, as far as shares available to borrow, I can double check this. As far as what we're looking like right going into the pre-market, we're pretty stable. We're at 4.4 million there. This is 4.6 million there. That's the highest I've ever seen in shares of GameStop available to borrow. Yeah, granted, I haven't been tracking this number for a lot of years, but that's the highest I've ever seen. That's certainly a 52-week high in GME shares available to borrow. And XRT with 2.5 million units available to borrow today. Again, I can double check, make sure what we're seeing here is current as of the time of recording this video. Okay, it has come back down. It has come back down considerably. So we were at 2.5, 2.4, 2.3. There we go. Get that 715 rocket-buy there, back down, right at contraction of 90% of the volume. It's back up. It's back up to these kind of normal levels, but interesting to see it go back up there, get that high. I'd never seen it go that high. So interesting. Not 100% sure what to take away from those really, really high levels in XRT. That may be a part of the fact that they created over 2 million outstanding units of XRT yesterday. But in any case, these are very high numbers. We do see rate shares outstanding going up. They are flush with lending liquidity. If somebody does want to come out and adjust the price using this lending liquidity, they have quite a lot of ammunition to do so. So even if today, right, even if tomorrow we have some continued upward momentum from whatever's going on with these cat errors, there can be an adjustment to the downside. There can be minor adjustments early on to kind of keep this bullishness contained. And then when it runs out, right, then this liquidity can be used as a free hand to adjust the price downward. So a little concerning there. We did see IV tick up. So certainly options traders, right, we can see here, right, we can see our, right, Volga came up a little bit. So we saw that increased chop, not quite like back here, but Volga is up a little bit. We see some increased chop. We see IV coming up in general. What's really anchoring this IV is June. So our June OPEX period is really our outstanding strike, and the couple weeks following June. So July OPEX is pretty high. Week after June OPEX, decently high. Week before June OPEX is pretty high. So earnings in the annual share report are in here somewhere. 6th of June is a little bit elevated, but as we can see, these 2 weeks of May, they're down. Going into May OPEX this week, that's also up. But yeah, coming out of here, this is down. So, as soon as this gets taken off the board, what happens to us? Do we just go ahead and slide for a couple weeks and then start to pick up again as earnings takes place, maybe around the annual shareholder report? Well, I'm seeing estimates, right? So TraderView is having estimates around the 4th of June. Schwab is saying 6th of June. Last year, it happened on the 7th of June. It happened on the day of Roaring Kitty's live stream, but that was a surprise. It was supposed to take place the following Tuesday. So it was supposed to take place 8, 9, 10, 11. It was supposed to happen on the 11th. And Cohen and Company moved up the release of the earnings report unexpectedly to Friday in order to announce that in order to announce that second really large at the market offering. So very interesting. And that was announced pre-market, right? So we're on our way back up. I think pre-market that day, we got up to $65 a share. So that was the second head before Roaring Kitty's live stream. And yeah, then we just fell pretty precipitously. We had another couple of rallies after that, but we fell pretty precipitously, didn't get back up to that level. So very interesting. So I wonder if the expectation here is that, yeah, we're not going to get, I don't know why it's marked on the 6th. They never release earnings on a Friday. That's I think, projecting from whatever last year was, which was unusual. I really think earnings is probably going to happen maybe that Tuesday or Wednesday. So that's going to be the 11th, the 10th or the 11th. So that would explain why this week is actually elevated the way it is, and why June OPEX the week after is elevated the way it is. Yeah, I wouldn't be surprised. We also have FOMC rate decision the week of June OPEX. So if that does happen, that'll be a pretty volatile week. But so that's pushing that up. We do have this, these 2 weeks are kind of a divot. So I wouldn't be surprised if we got some crush. Then that can bring down some of the IV in these strikes. Then the price can go down. Anybody who sold options, anything for this out here can take profits as we move down into these weeks here, if that is to occur. So the setup is there, where we got kind of hung up technically a bit. In this, I'm not sure about the Fibonacci term for something like this, but it really it tracks to the opening and closing price almost exactly, right? Our wick yesterday, the opening and closing price of our 326 candle there. In terms of options, we did see a lot of profit taking in the money strike. So anybody basically who was holding essentially for this move, right? I mean, that was myself as well, right? I had, when we went back down to 2570, I'd entered into some long positions, long options positions. Here, I think this was more or less what some traders had entered into those positions for. And there was a lot of profit taking yesterday in that range in the short term. There was some bullish activity between 29 and 30, a lot of sold calls, bought calls, good mix. 28 had a lot of puts bought at the ask going into Friday. So this looked like somebody who was potentially betting on something of a shove at least through that 28 level into May OPEX. It's a very short bet, so if it doesn't work out, it doesn't work out. Did see quite a lot of calls sold at $35. A big block of short calls sold right before the close for June OPEX. So that's very interesting. But also some really big blocks. I mean, tens of thousands of big blocks of way out of the money puts, way down at $10 for January OPEX in 2026, January OPEX in 2027, and December OPEX in 2027. So way out of the money, short puts. So some of that definitely certainly skewing bullish, especially because of those short put trades on the day. Max Pain still at 2650, moving up to 23 for this week. Looking at our gamma data again, right? It does look like if nothing happens, if we don't get shoved, if we don't account for this ETF stuff, if we don't account for these kind of external factors, both the ETF covering and the potential lending liquidity used to short the stock, then, or I should say transpose via short, whatever you want to call it, then yeah, it does look like we're going to hang out in this 28 to 30 region, especially given how supportive that 28.35, 28.36 line was yesterday. I wouldn't be surprised if we hung out in this range, and then maybe toward the end of the week as we sort of settle off from charm. Maybe not even a lot of repositioning has to occur in order to drive these 28s out of the money. Options market maker will be probably pretty happy to see this entire position out of the money. All of the calls at 28, 28.50, 29, 29.50, and 30. Just not even have to worry about those. But it does seem in the short term that if I'm just judging from option stuff, it does seem like this is where we'll hang out. It also seems like that 30 position, I mean, depending on the force of this external buying, but so far it does look like our option structure, this gamma hedging structure, has been strong enough to contain this bullishness that we've seen from this cat equity error and or XRT settlement buying volume. So even if we do continue to see some of that today into tomorrow, again, I'm not really looking at expecting that to exceed 30. I think 30 is a maximal extension. And I'm wary of all this excess liquidity and when it might be deployed to sort of move these these lower strikes here, so 29, 28, 28.50 out of the money. So that's what. Hey, I'll be as happy as the next guy if we end up continuing to move up here. But I just see this is what I'm wary of. This is especially something we've been exposed to very recently in GameStop back in January, right? We saw some of this in our previous bull run back that 11/29 to December 5th price action, right? Seeing all that lending liquidity get used to transpose the price down somewhat. You never like to see that kind of pop up and occur. It never feels good. So I try to be wary of that. Try to stay honest about what I think are the likelihoods of some of this happening. So that's what I'm looking at, right? So just staying cautious, but also keeping in mind we could see another couple days here if indeed this bullish volume we're seeing is driven by these cat errors being covered or settled or something like that. Then yeah, we might see that for another day or so, basically into tomorrow. But tomorrow we'll also be looking at the last of institutional 13F filings, as well as what we have in terms of XRT FTDs for the second half of April. So exciting day tomorrow, certainly in that regard. From a data regard, In any case, good luck out there today. Thanks for watching. Let's go GME, and we will see you guys tomorrow. Take care, and thanks very much.